People don't know what, Ray.
People don't know what they don't know, and we're here to let them know what it is that they don't know so that they won't be so, I don't know-ish in the future.
And honestly, we realize how much we don't know through the comments as well. We appreciate all those comments and people sharing information with us. So keep them coming and keep letting us know what you want to hear. I think today, Ray, what were we going to talk about? We were going to talk about lease end, right? We've seen a lot of people coming to us and saying, my lease is coming due soon, or maybe my lease has been extended because of what's going on with coronavirus. I've got a 6-month extension. We've even had some customers of ours who are asking us, hey, I've got 3, 4, 5, 6 months left on my lease. How do I move into this new car? So we thought we'd take some time today to talk about leases. Yeah.
I think that's a good idea. And one of the things that I was hoping we could discuss is really what are the customer's options at the end of their lease. Most people don't give it a whole lot of thought, but you have basically 3 real options at the end of the lease.
Yeah.
Option number 1 is you can take the car back to the dealership and turn it in and say, hey, thanks guys, that's been great fun. I don't know that I want to do it again. So here's your car, and you'll get a bill from the leasing company for any excess wear and tear that might have been discovered at the time you turned it in, or for your lease disposition fee, because all leasing companies have a lease-end disposition fee. In case you don't get another vehicle, they have to dispose of the vehicle, and they're going to charge you for having to do that. In most cases, it's $395 for most lenders.
Yeah.
So you can just turn the car back in and walk away. You can turn the car back in and go into another lease or purchase financed through the same lender,
Yeah.
and they waive that disposition fee for you. So there's that encouragement for you to continue with that brand and with that finance institution.
Okay.
And the third option you have is that you can buy the car for the residual value. And you know what that residual value is because it was established the day you leased the car. It's just a percentage of what the original MSRP was. Now, in most cases, especially today with the decline in the wholesale value of pre-owned cars, the residual value is going to be higher than its real value. But in some cases, depending upon what car it is, the residual value will be lower than what you could turn around and sell the car for. So if you know you can buy the car for your residual value of, say, $15,000, but you know on the open market, you could turn around and sell that car for $18,000.
Yeah.
Well, that $3,000 is yours.
Well, and let's almost timestamp this video, this moment in time, right?
Yes.
That example you just gave, it probably isn't going to happen right now during coronavirus, right?
Doesn't happen most times, but in particular, it's not going to happen right now during coronavirus. But in the times that it does happen, it's an option for you. But the beautiful thing is that even if the residual value, which might be $15,000, but if the real market value is, say, $12,000, guess who's not getting the bill for that $3,000?
Yeah, definitely. That was, yeah.
Because it's not your responsibility. But in those rare instances where the car's real market value is significantly higher than your residual value, that's a profit that you can take advantage of. And realistically, if you are in one of those positions and you make an extra $3,000, well, you can factor that into what your net lease payment really was.
So instead of rolling over negative equity, you're rolling over positive equity. So
yes.
I have a question for you. I mean, in your career, did you see that happen often, ever? And maybe this is just me being a young buck, but like, did someone roll over 5,000, 10,000? Like, what were some of the best, situations you came across?
Well, I remember in the old days when they were open-end leases and and the customer was responsible for the residual value, not the lease company, that the customers would get hurt. And conversely, there were times where when the customer was responsible for it and the car was in short supply, but there was still a big demand for it, that I've seen people make $3,000-4,000 by buying their car and selling it themselves. It's not that it's not that you trade it in. You have to buy it and sell it yourself.
Yeah. So I think that's important because, and comment down below if you want us to focus maybe a whole video series about the mechanics of leasing. But that's a really important point. Is you're I don't want to say you're renting the car, but you're kind of renting the car for the lease period, and then someone has to pay it off and buy it.
Can I help you with that?
Yeah.
That's exactly what you're doing. You're renting the car. Okay, you're renting it for the lease term, which is in most cases 3 years.
Yeah.
And during that rental time, you are paying some interest and the depreciation of the car. And if the depreciation is artificially supported with higher residual values, then there's less depreciation. So, for instance, on my Mini, which probably had a residual value of 63 or 64% of its original MSRP for 3 years from now, which in reality, the car is not going to be, well, my car might, because by then maybe it'll have 1,000 miles on it. But normally, the residual value in situations like that is going to be much, much higher than what the real value of the car is. So you're not going to be able to take advantage of that situation.
You mean the residual value will be lower, right? If you're making...
I mean, the residual value that they've set will be much higher than what the value of the real wholesale value of the car is.
Gotcha.
And because the residual value is higher, you're paying cheaper rent because you're paying for less depreciation.
Yep.
I think you discovered something like that when you were working on a Pacifica for a customer, and you were shocked and amazed to find out that a $52,000 car,
Minivan, thank you.
Yeah, minivan, had a residual value of 51%, so that 3 years from now they were figuring its value to be somewhere around $27,000 on a $52,000 car.
Minivan.
That too.
I was shocked on multiple levels from that interaction. That FCA Chrysler makes a $52,000 minivan, and then that the captive lender, Chrysler Capital, was essentially saying, not essentially, they were saying outright, this car we expect to be worth 51% of what it currently is when there's 36,000 miles on it 36 months from now.
And they were hoping.
Yeah. And then, the customer thinks, great, instead of buying and financing the entire value of the car, I'm financing and renting this portion of time in that vehicle, right?
Exactly.
Yes. So then at lease-end, what do you typically see people do? And even for yourself, like, were you in a lease before you got into your current Mini? What was your approach there?
Yes, I've been leasing most of my cars. And what most people do, and don't forget, I spent the first 18 months of my quasi-retirement doing lease-in portfolio work for a dealership group, trying to encourage customers to come back and get another car, whether they lease it or buy it through that dealership group again.
Yeah.
And the vast majority of people, and when I say vast majority, probably 60 to 70% will come in at lease end and move into another car, same brand,
leasing,
using, move into another lease of the same brand at the same dealership or at a different dealership of the same brand.
Yeah.
A smaller percentage turn it in and walk away for whatever reasons. Sometimes it's because their job has moved them out of the country or moved them to another part of the country, or they just no longer have a need for an automobile because it turned out that over the life of their lease they only put 10,000 miles on the car.
Yeah.
And then um, a, a decent sized group of people who leased their cars and really didn't put a lot of miles on them said to themselves, I'm buying the damn thing. Just for their own use, because they know everything about the car. They know how it's been maintained for the last 3 years. They know it hasn't been abused and it hasn't been driven a lot. And so they end up wanting to buy it. And oftentimes, the captive lender will, even though the residual is what you're supposed to pay for it, in order to encourage customers to buy some of these cars themselves, they might discount the residual or put together a program where they can certify the car for you, to encourage you to go into it. And obviously, they encourage you to allow them to finance it for you.
Yeah, yeah, of course. Then they're still making a little bit of money. Um,
Yes.
I guess I have a question. Can you get out of a lease early? Because I know a lot of our clients, they come to us and they have, yeah, 2, 3, 4 months left on their lease, or maybe they just signed this, 6 month or month by month lease extension because their lease came due during this pandemic. Are there ways that you can weasel your way out of a lease without really hurting your checkbook too much and get into a different car?
It depends. It depends on whether or not there might be a pull ahead program for the car that you're currently leased in. But let's assume for a second that there isn't, and you're 5 or 6 months out. Well, based on what the residual values are, no, it's not a good idea. Based on what your remaining payments might be, and how they might impact your new payments if you were to roll the remaining payments into your next lease or purchase, there could be a way out.
Yeah,
Or you could stroke a check to clear it. It might be cheaper to stroke a check for 5 payments than it is to stroke a check to pay it off.
yeah,
And the only reason you'd pay it off is if you were going to buy it. So if you wanted to get out of it and into something else, then you would consider stroking the check for the remaining payments, or have those remaining payments factored into the new lease so that the dealer can then send the captive lender the remaining payments and return the lease car.
I've got this goofy smile on my face because every time we talk about leases, it gets confusing. I mean, it's really, I know a lot of people out there lease their vehicles, but I wonder if you really understand every aspect of it, because so many people come to us and they'll have 5, 6, 7 payments left and they'll be like, yeah, I'm ready to get in a new car. And it's like, it doesn't really make sense to do that.
I always told customers that leases are designed to go full term. And what I mean by that, if it's a 36-month lease, I encourage you to make 35 or 36 of those payments
Yeah.
before you want to get into the next car. It's if you try and get out of a lease early, just like if you try to get out of a financed car early, and you don't have the cash or the desire to put up the cash to compensate for those payments,
Yeah.
then you're throwing negative equity into your next lease or your next purchase. And you've heard me talk enough about how I hate negative equity. So no, I don't encourage people to try and get out of their lease early. Yes, I got out of my lease car 1 month early. Okay. But I made the last payment. I just didn't get the use of the vehicle for that last payment. And based on the way I'm using my car now, I'm not getting the use out of my car for any of my payments now. But that's besides the point. That's another story.
Yeah, no, I hear you loud and clear. And I guess, one other question I have is, as you approach lease end, or even as you sign on for a lease, there's all sorts of other considerations that you have to have. Like, for example, you literally don't own that vehicle. So what happens if you get in an accident? Or, there's all sorts of other things that kind of come into play when you're thinking about leases that I think can make it a bit confusing. And the reason I bring this up is because, you mentioned this in another video that we shot relatively recently, where one of the tactics you would use with your salespeople would be to ask a customer, well, if we could get you a monthly payment at this number or a lease at this number, which would you prefer? Or what monthly payment do you want? Well, and if it was a lease or if it was finance, would it matter? No, I just want the monthly payment. Great, you're going to sell them a lease because they're going to make more money that way. So I feel like individuals might end up in leases and not necessarily understand gap insurance or all sorts of all the considerations that go into leasing.
There are a couple things to understand when you lease. A, because it's not your car, you're required to carry higher insurance limits. So your automobile insurance is actually going to go up on a lease as
Really?
opposed to on a purchase, because the state minimums might be $15,000 and $30,000 on a purchase, and the bank's okay with that on a purchase. On a lease, it might be $100,000, $300,000.
Wow.
Okay, so
Comment
you're
below if you want us to do like a deep dive on insurance, because I would love Ray to get you to talk more about that because I wasn't aware of that.
yes. And then the other thing is gap insurance, and what most lease companies, if not all lease companies today, include gap insurance in their lease acquisition costs,
Okay.
so that just about every lease car is covered by the lender's gap insurance policy that they're buying for it. And the reason you want to make sure you have gap insurance is, God forbid, anything happens to the car, it gets declared a total loss. Um, your insurance company pays X, uh, and X is nowhere near what Y is, which is what's still owed on it.
Yeah.
And the gap insurance covers that difference so that you can be whole and get into another vehicle. It's good for you and it's good for the lease company,
Yeah.
because the lease company doesn't want you getting into another vehicle while you're still, I don't know, making partial payments for your last vehicle to cover the difference between what the insurance company paid and what was still owed.
And I imagine that came about because that was actually happening, right?
Quite frequently, yes.
Yeah, I could imagine having some customers who are just perpetually making payments. I mean, just perpetually.
Yeah. If you don't have gap insurance, I mean, if you're financed a car,
Yeah.
you don't have gap insurance. And let's take this a step further for people that do the longer term financing.
Yeah.
If you don't have gap insurance and your car gets totaled, and your insurance company is only going to pay what the value of it is, and that doesn't take into consideration what's still owed, well, the bank, the lending institution, has the right to require you to make payments to make up for that deficiency between what your insurance company paid and what the balance still is. So you could be in a new car loan and you could still be making deficiency payments on your previous car loan because you didn't have gap insurance to cover the difference between its value and what's owed.
I have
So,
an incredibly dumbfounded look because I was not aware of that.
well, why would you be?
Yeah, that wasn't usual like dinner conversation. It was more, man, you have some great stories that you used to tell us at dinner, like about customers that would come in right as you were trying to close, and the kids would be all in the back seats of the MDX messing around with everything. But that can be a whole, I feel like we need series, right? Like we need we need a whole series on insurance because you got some stuff to teach me on the insurance side. Feel like we need you and a whiteboard and maybe like a lab coat to really do a deep dive on leasing. And then I want some stories, and I wonder if everyone else does as well. But from 43 years, and you're a pretty good storyteller, maybe we get you a little glass of whiskey so that you can, have a bit
Apple juice. Apple juice, not whiskey. Apple juice.
we'll get you some apple juice.
Right.
Here's some dealership stories because, yeah, I feel like there's so much depth across all those areas that I know I'd get a kick out of it at least.
Well, there's a lot that people don't know. I mean, we joked at the beginning of the video that, we're here, you don't know what you don't know, and people really don't know. If you're outside the industry, you don't know. You don't know to think about these things, and those of us who were in the industry, well, we're forced to think about these things because we would come upon them on a daily basis.
Yeah, and I guess to wrap things up here for this topic, you're coming to lease end. You've got your three options, which where you can make your final payments and walk away. The instance where you're going to do that, maybe you're moving away, maybe you're moving to a city, you no longer need a car, etc. You can make your geez Louise, you can do something else.
Why don't I review the three options for you? You can go into the dealership and just return your lease car and walk away. You can let your lease expire and move into a new car through that dealer again.
Yeah.
Or if you have the opportunity that you're able to buy the car for much less than what its real market value is, you can do that and then sell it and reap the profit for yourself. But that happens rarely.
Yeah. I'm like shell shocked. I'm going to get roasted in the comments below now. Do I even listen to my own father? And the answer is yes. The answer is yes. And most,
Yes, and from a father's perspective, not nearly enough. I think we should leave it at that.